just witnessed something that normally should not occur in an ordinary market. It collapsed sharply, flushed people out, and snapped back instantly like it never dropped. A double-digit fall within only a few days. Then you're looking at the highs again. So what really occurred? And why are some voices suddenly discussing price zones that sound ridiculous? This is not the slow, courteous type of bull market where price rises, pauses for months, and gives you time to reflect. This is the type of surge where corrections are counted in days. Blink and you don't miss a candle, you miss the move. So in this video, I'm going to unpack the real story behind silver's action, why the whipsaw sell-offs keep failing, what a major signal just flashed, and why the next stage could be the one that leaves latecomers angry and early buyers thankful. And near the end, I'll reveal the one relationship that has historically turned silver from powerful to violent. And when it snaps, things turn strange fast. I'm John A., and if you're here for honest talk and clear signals, you're in the right place. Now, just before we jump in, quick note. If you want silver-related success stories from real people, how they navigated cycles, stacked patiently, and turned discipline into serious results, there's a link in the description to a separate channel that focuses on that. Go subscribe there as well, because those stories can keep you grounded when the chart tries to mess with your head. All right, diving in. And yes, I'll show you the exact moment this shifted, because once you see it, you can't unsee it. Stay with me until the end. Today, markets don't move from one extreme to fair value in a straight path. They tend to overreact. When a market spends years trapped, compressed, and ignored, it doesn't calmly step into a new reality. It often blasts through it, overshoots, and forces everyone to rewrite what they thought was possible. And silver has been trapped for a long time. Not because silver is weak, but because silver is complex. It's not just a metal. It's not just an industrial component. It's also a form of money, an asset that behaves differently the moment confidence in paper promises begins wobbling. That means silver can ride two waves simultaneously. And when those waves align, you don't get a normal rally. You get a squeeze, a scramble, and a stampede. This is where the crowd keeps missing it. You'll hear the same chorus every time silver surges. Sell it, take profit. It has to return to the old level. It has to retest the breakout. In calm markets, that logic can work. But look at what just happened. The market dumped quickly, punished weak hands, and rebounded so fast that anyone waiting for a slow, comfortable entry was left behind. That kind of behavior is not random. It's a message. It says the underlying bid is stronger than the panic sellers and stronger than the people trying to cap price. So the question becomes, why is the bid so strong? Let's split it into two engines that can drive silver higher. Engine number one is monetary. When people start treating silver as money again, when they stop seeing it as a commodity trade and begin seeing it as an escape hatch from currency risk, demand stops being price sensitive. People don't buy because it's cheap. They buy because they don't trust the alternative. And here's what makes this cycle dangerous for skeptics. Monetary demand usually appears suddenly. It waits, it observes, and then one trigger hits. Maybe a policy change, maybe a liquidity shock, maybe a confidence fracture, and the bid appears like someone flipped a switch. When that happens, the market doesn't give you time to debate it. Engine number two is industrial. Silver sits inside the wiring of the modern world. Tech, electrification, solar, data, infrastructure, whichever buzzword you choose, silver is embedded in it. And the story investors keep underestimating is that industrial demand doesn't politely pause just because price is climbing. It has deadlines and contracts. If supply tightens, buyers pay more. You don't need flawless data to see the trend. You can see the pressure in how price behaves. Fast drops that don't hold, dips that get bought, pullbacks that feel like traps. That's the fingerprint of shortage pressure colliding with rising attention. And that brings us to the part almost nobody watches carefully enough. Silver's relationship to gold? Most people stare at silver's chart alone and assume history will repeat with the same rhythm. But the explosive phases in silver have often been preceded by a very specific event. Silver begins outperforming gold in a clean, undeniable way, not for a single day, but on a closing basis that forces the market to admit it, real. Here's why that matters. Gold is the parent metal in institutional minds. It's treated like a reserve asset. Silver, by comparison, is the wild cousin, cheaper, thinner, more volatile, and easier to squeeze. So when silver starts rising relative to gold, it can signal the market is shifting from conservative protection to aggressive positioning. And that's when silver can move from climbing to flying. Think of it this way. Gold is the heavyweight. Silver is the lightweight with a knife. When silver starts winning the race, the crowd realizes the old playbook is breaking. And once the playbook breaks, targets get revised upward quickly. A veteran momentum analyst recently made a point I think is critical, even if you disagree with his exact figures. The mistake technical analysts keep repeating is assuming silver will behave the way it behaved over the last couple years. They zoom in, measure normal, overbought, and oversold zones, and build tidy targets like the market is obligated to respect their ruler. But when a market escapes a multi-year cage, normal rules stop applying. In those phases, it's common to see acceleration in a compressed burst. Months of movement in weeks, weeks of movement in days. And if you look through history, there are cases where a long range finally breaks and the market doesn't drift higher. It violently reprices. This is what people mean when they say it's entering a new reality. And when a new reality starts, the most dangerous thing you can do is anchor to the old one. That's why the "it must go back to the previous ceiling" crowd keeps getting steamrolled. They're treating an old boundary like it's permanent law. It's not. It was a psychological line formed by years of boredom, bad positioning, and disbelief. Once a market breaks through that type of ceiling and holds it, the ceiling doesn't stay a ceiling. It becomes a floor until the market finds the next place people stop believing. Now, let's discuss targets, because this is where people either get excited or dismiss it. One widely discussed outlook suggests a minimum long-term target in the low hundreds, with a scenario where silver could reach several hundred if financial stress intensifies. Is that certain? No. Is it impossible? Also no. The right way to think about it isn't ponderous ENT, will it hit 200 or 500? The right way is what type of market structure would allow that outcome. Because if the structure is forming, you don't want to be emotionally unprepared when price begins doing things that cause the comment section to melt down. Here are the components of that structure. First, volatility compresses, then expands. You get a long stretch where price feels stuck, excitement fades, and only stubborn holders remain. Then, when the breakout arrives, it doesn't feel friendly, it feels unfair, and that emotional response becomes part of the fuel. Second, tight supply matters more in thin markets. Silver isn't a deep ocean like a major equity index, it's more like a lake. When big buyers enter, the water moves. When shorts panic, it splashes. Third, the money narrative returns. If enough participants begin treating silver as insurance against currency dilution, policy instability, or systemic stress, sellers disappear. People stop thinking, "I'll sell when it feels expensive," and start thinking, "I'm not letting this go unless I'm forced." That shift alone can change the personality of an entire market. And here's the cliffhanger. When those three elements align, the chart stops being a chart and becomes a headline machine. That's when silver stops living in niche corners and starts appearing everywhere. But we're not completely there yet. What we're seeing now is the setup, the warning shots, the market probing the edges of disbelief and discovering how quickly it can recover. Did you notice how rapidly sentiment flipped during that sharp drop? One brutal move, and suddenly the loudest voices were calling for total collapse. And then as soon as price rebounded, those voices vanished. That's not analysis. That's emotional whiplash. And markets love punishing emotional whiplash. Now look at the pattern that keeps repeating. Fast sell-off, immediate rebound, fresh push. That pattern tells you the market is rejecting lower prices. It's telling you buyers are waiting beneath the surface, not buyers hunting bargains, but buyers who see dips as opportunities to secure supply. And when you're in that type of environment, the multi-month correction mindset becomes outdated. The market doesn't hand you long rest periods because demand doesn't take long naps. It's industrial, it's monetary, it's structural. So what could the next trigger be? It might be a clean monthly close confirming silver is outperforming gold in a way that breaks a decade-long barrier. It could be a policy shock forcing investors to rethink real assets. It could be a credit event that makes safe assets look unsafe. Or it could simply be momentum, price, rising high enough that the sidelines grow tired of waiting and chase. And when chasing begins, silver doesn't jog. It sprints. We've seen versions of this story in other markets as well. A commodity trades inside an old range for years. Everyone assumes that range is permanent, and then one breakout changes everything. Suddenly price doesn't just rise, it reprices. And the repricing happens in a compressed window that makes it feel like chapters are skipped. That's why the boring years matter. They're the spring being compressed. So if you're thinking, okay, but what do I do with this? Let's keep it practical. If you're already positioned, the main risk isn't price. It's your own behavior. It's panic selling a dip that rebounds, then buying higher because you can't stand being wrong. That loop is how people hand their gains back to the market. If you're not positioned, the risk is waiting for a perfect entry that never shows up. Because in fast cycles, the market doesn't reward perfection. It rewards preparation. And if you're somewhere in between, holding some and watching more, your edge comes from recognizing the phase you're in. Are you in a normal grind or the early stage of a regime change? I believe we're in a regime change, and I'll tell you why. The discussion has shifted from will silver ever break out to how far can it run? That transition doesn't happen in a sleepy range. It happens when the market has already started stepping into its next identity. Now, I want to address the elephant in the room, the idea that this move is manipulated, suppressed, or capped. People argue about this endlessly. Here's my view. Whether you believe in suppression or not, The only thing that matters is what price is doing right now. And right now, the market is acting like it's absorbing pressure and pushing higher anyway. If sellers truly had control, those sharp dumps would stick. They would cascade. They would break structure and keep it broken. But that's not what we're seeing. We're seeing drops that feel violent and recoveries that feel insulting. That's not weakness. That's resilience. And resilience is what comes before expansion. Now, earlier, I teased the one relationship that can flip silver from strong to explosive. Let's spell it out. When silver rises against gold and holds that outperformance, it signals the market is abandoning the old hierarchy. It says the crowd is willing to move further out on the risk curve within the precious metal space. And historically, that's when silver can accelerate so aggressively that traditional targets stop making sense. That's why some analysts are throwing around numbers that sound insane, not because they're profits, but because in a repricing event, the range of outcomes expands dramatically. The conservative listener hears hundreds and laughs. The prepared listener hears it and asks, what would need to happen for that to be realistic? That second question is how you stay rational inside irrational markets. So here are 2 questions I want you to answer in the comments. First, do you think silver MOS next major move will be driven more by monetary fear or industrial necessity? Second, if silver rips higher quickly, what will you do differently this time? Hold through volatility or try to trade every swing? Now, as we approach the wrap-up, let's talk psychology, because this is where reality shifts. The next phase is when price moves so fast that people start taking screenshots. It's when mainstream attention arrives late and interviews appear everywhere, and the market becomes a daily topic. And when that happens, the final fuel isn't logic, it's emotion, regret, fear of missing out. It's the pain of being left behind. And silver is one of the best markets in the world at converting those emotions into bad decisions. That's why you need a framework before the move, not during it. Because during it, the chart will bully you. You'll see a massive green candle and feel brilliant. Then a sudden red candle will make you feel foolish. And if you let your identity attach to the next candle, you'll get shaken out of the trend you claimed you wanted. So here's the mindset I believe matters most. Expect abnormal behavior. Expect fast pullbacks. Expect headline-driven whipsaws. And most importantly, expect the market to punish the crowd. Because if this truly is a transition into a new reality, then the crowd's old habits, waiting for months of correction, assuming the old range is permanent, believing every scary dip is the top, those habits become exit liquidity. I'm not telling you to be reckless. I'm saying understand what kind of market you're watching. This isn't a sleepy, polite advance. This is a market with 2 engines, tightening supply dynamics, and a history of violent repricing once certain triggers break. And if that trigger is already unfolding, the next stretch could be the kind people remember for years. So here's the short CTA. Hit subscribe now so you don't miss the next update. And one final reminder, check the link in the description to that Success Stories channel and subscribe there as well. Sometimes the best way to survive a wild market is to hear how others kept discipline when things went crazy. Because if silver truly is about to explode, the people who win won't be the loudest. They'll be the ones who were ready before the crowd arrived.